Okay, so now what we're going to do is we're going to focus on chapter 3. Chapter 3 is a very, very, very important chapter. Honestly, I would think the most important chapter, though, honestly, guys, you guys have understood or at least experienced. Chapter 2 is really the most important chapter that you probably will ever have to need for accounting because it kind of summarizes the whole process of recording. In order to record, you have to understand the basics, but more so in order to report, you have to record. So if you do improper recording, your reports will automatically be improper. And so chapter 3, I would say, probably will give you the most difficulty. And the reason is because it's a little bit different and conceptual to what we have begun to understand. Okay? And what you have to be considerate about is definitely all the material that you've discovered in chapters 1 and 2. If you don't really understand chapters 1 and 2 as of this level right now, you will not get chapter 3. Chapter 3 is a very strategically sound chapter because it deals with adjusting entries. Okay? And so I want to give you a quick overview of where we're going with this process because right now I'm teaching you the process. Accounting is a process. And so right now I'm teaching you the process. And so let me kind of reiterate what we've discovered so far. So far in chapter 1, we learned how to identify transactions and see how they affect accounting equations. Well, in reality, that's what an accounting does as a profession. He goes to work and he identifies whatever transactions that affect the company that happens in that day, and he identifies and he evaluates how it's affecting the accounting equation. That's step 1. Step 2 would be for the accountant to do what? Actually record that transaction, which goes into chapter 2. So the accountant would record the transaction into his journal. Then he would post that information into his ledger. And he would continue to do this throughout the entire period. This is the recording phase. The recording phase is simply just journalizing and posting to the ledger. Journalizing and posting to the ledger. Now, towards the end of the recording phase, you begin to work towards your what? Reporting, the reporting part of the process. That's the second half of the accounting process. And we also saw that in chapter 2. In chapter 2, we saw going into the reporting part of the process that we have to create ending balances. We have to, after creating ending balances, create a trial balance to make sure our debits and credits equal. After we create the trial balance to make sure our debits and credits are correct, we then go to the reporting aspect. We make those financial statements. And so once we make those financial statements, we aren't finished yet. We aren't finished yet. Honestly, let me stop that. Let me go back. After we make the trial balance, there's a step in between the financial statements. So let me repeat that. Right after we make that initial trial balance, there's a step in between the financial statements. And that step in between the financial statements is what we're going to discover now in chapter 3. That step in between the financial statements right after the trial balance is called adjusting. We have adjusting entries. And so basically what we're going to do is we're going to learn how to adjust. So right after we make that trial balance, we're not finished and we're not ready to go to the financial statements. We have to adjust certain accounts. Now when we're talking about adjusting certain accounts, what are we really saying? Well, it's simple. You can adjust something. You can adjust the temperature. If I'm in this room right now and I want to adjust the temperature, there's only 2 ways I can do it. I could either what? Increase the temperature, or I can what? Decrease the temperature. And so the same rule goes with accounting. After we make the trial balance, it's time for us to adjust. So we have certain accounts that need to be adjusted. Okay? And what we're going to do is talk about those accounts that need to be adjusted.